But Bajaj Auto is the only stock that's actually bucking the trend this morning, and that stock is up almost about, what, 2.5%. A good set of earnings, largely in line with estimates. The revenues increased around 16%. Margins have also expanded about 130 basis points compared to what we saw last year. The management, however, was a bit cautious on the call with respect to the domestic market. They're expecting a single-digit retail growth for the festive season. We have the management with us to tell us about the way forward. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Rakesh, good morning and thanks for being with us on the channel. The first question I have to you is on exports, because on the call you mentioned that Q3 would be better than Q2 in terms of exports. Can you safely say that the worst of the export pressure is behind you? And if yes, can you quantify for us what could the growth be? When can we expect to get back to this 200,000 unit export run rate?
Good morning, Sonia. Why the worst is over in exports is because in the previous quarter, we have brought our channel stocks, our distributor stocks in line with the retail. You know, there are at least a month of or 2 months of stocks always on the water. And when the retails fall as dramatically as they did, particularly in Africa, the most important thing is to get the stocks in line and ensure that the exposure of our distributors is at manageable levels. So in the entire Q2, our exports were lower than the retails which we were experiencing in Africa. So July was the low point, and since then August retails were better than July, and September retails have been better than August. But so the worst is over from that point of view. But in terms of the volatility, in terms of the impact, inflation, devaluation, availability of dollars, those things are still continuing. I think it will take probably another quarter for the availability of the US dollar for international trade to sort of settle in. And but going forward, yes, our exports will be better simply because now we will not be trimming any stocks. They will be keeping pace with retails, which are improving gradually.
Okay, so you're saying that the worst in terms of export retails is now behind you, but there are still a lot of challenges on the horizon. I take that point entirely, but this time your export realizations were up as well. Higher dollar realizations is what you saw. I think there was a 23% year-on-year improvement in export realizations. Is there some more of a positive impact that you expect to flow through in the second half of the year? And would that help you in terms of blended margins as well?
Yes, the reason for the export realizations to be better is a combination of two things. Primarily, it's a mix effect because the larger geography of Africa, which is generally the lower priced models which go there, that weight for that reduced. But on the other hand, our sales in our business in LATAM and ASEAN, the penetration or the market share and the mix of our higher end brands like Pulsar and Dominar, that improved, and we are at an all-time high of 21% of our portfolio being Pulsar and Dominar with very high market shares. So that was rolling on very, very nicely. So it's a combination of that. And I would say that that aspect of the business will continue because we are having very good traction. In fact, all our new models are just about to be shipped, and they're going to be making an entry into LATAM and ASEAN in the next 2 or 3 months. But in terms of how exactly it pans out, we'll have to see the overall mix effect of the different countries.
Hi, Mr. Sharma. Morning. Can we get a couple of numbers going then? Margins, clearly they're looking up. 5 to 6 quarter high, I think your margins have come in at around that 17-odd%. Now, the supply side issues are getting sorted out. Input costs hopefully cool off. Volumes will pick up as well, as you're admitting. So what kind of a margin expansion can we look from here on? Could we factor in close to around 100 basis points, say by Q4 in comparison to Q2? And on the volume front, if exports, you have done that inventory correction, for the year, what do you think? Export decline of close to around 8 to 10%, would that be par for the course?
See, as you know, Q2 was a record-smashing quarter for us. We have achieved our highest top line and our highest EBITDA in rupees crores ever. Of course, it was aided by pipelining the stocks in the domestic market, but nevertheless, given all the stuff which was going around, it's a very, very delightful performance from our point of view. And going forward, our whole approach is to maintain both the top line and the bottom line and the profitability as we go forward. The demand in domestic is still muted. It is not negative, but it is very marginally positive during the festive. The export environment is volatile, and therefore we feel that if we are going to just match our Q2 performance in Q3, I think that would be a very, very good objective.
And on the margin front, sir, you said margins will be maintained at these levels, 17.5%?
Well, there is no certitude in today's environment.
But as things stand today,
it is our effort. I'm not saying that they will be maintained, but we are saying that, given everything that is coming together and the rhythm which we have, we should be able to, we will be trying to keep our Q2 top line and bottom line performance.
Mr. Sharma, hi, good morning. Prashant here. On the electrification bid, the Chetak two-wheeler, the expansion has been pushed out a little bit in terms of how many cities you plan to get to, by when. And last time we spoke, you said that the three-wheeler electric vehicle should be in the market by January. I think that's been pushed out a little bit as well.
The expansion actually is now in the on the Chetak side. The expansion is going to be accelerated because our supply chain visibility, which sort of became very cloudy in Q1 and to some extent in Q2, has improved substantially. So we are able to see what is the kind of flow we will have in the next couple of quarters, which allows us to now ask the network, the dealers, to commit to opening dealerships and putting in the infrastructure. So going forward, I see the same pace of growth which we saw between Q1 and Q2 to go on in Q3 and Q4. So hopefully, we should be in about 85 to 90 cities from the current 40 by the end of Q4.
But
now, when it comes to three-wheelers,
Sure.
You are right, absolutely. The trials have got extended because as we are doing extensive trials along with the drivers of three-wheelers in a few locations across the country, we are wanting to get, their requirements are very stringent, and we are wanting to sort of adjust our product proposition to suit their requirements. In fact, to give you an idea, you know that the Delhi government has released 4,500 odd e-permits, but till date, even after 1 year, the performance is very, very low. People are not picking up electric three-wheelers at the pace. By now, we should have exhausted those permits, but they're not. Only 10 or 15% have got exhausted. And the reason for this rejection by the driver community is because the current three-wheel e-autos are not hitting the sweet spot.
Sure.
And therefore, we decided that instead of hurrying up and putting in a product which was not optimal, we will take probably another quarter to adjust the proposition and come back in, by the end of Q4, hopefully, on a commercial basis.
So earlier, there's been repeated delays, right, in terms of the timeline. Earlier, it was September 2022. Now it's March 23. You stick to that deadline, or do you think it could take some more time beyond March as well?
See, I would call these delays, This is engagement with the product is ready. This is engagement. We can put out the three-wheeler tomorrow. They're all running around. But what's the point of putting out a product which is not meeting the commercial requirements of the dealer in terms of the optima between the speed, the range, the loadability, how it climbs the flyovers? There are innumerable factors which have to be adjusted. And that is what we are doing. The electric format allows you to address these various parameters. And that is exactly what we are trying to do. And hopefully we should be able to do that, put renewed trials and come through by end of Q4, like I said.
Okay, one final question then, Mr. Sharma. You said in your conference call that there'll be single-digit growth for the industry in this festive season in motorcycle sales. That seems to be a bit on a cautionary side, given that on a low base, the first half has seen, what, a 13% growth for you. So are you trying to say that for the full year, for the industry, we're staring at a single-digit growth, not just in the festive season? And what could the compounded growth be, say, over the next 1 to 2 years?
Well, you see, the industry, let's normalize the industry for the base effect in Q1, because last year was COVID and this year was not. But if you see, FY22 was a decline. Q1 on a normalized basis was a decline, and Q2 was a decline. But yes, in the festive, we have seen, from an industry point of view, a marginal growth, very low single digit. If you take the period from the start of the Navratri, the Dasharas, until Saturday, which is the numbers which I have. And this is a consequence of two almost distinct and opposite trends. What we are finding is that the entry-level motorcycles, which constitute almost 50% of the industry, they're having a strong double-digit decline. But the segment of 125cc plus 150cc's, the sporty bikes, etc., they are seeing nice growth. So as a combination, the industry is in a very, very marginal state. Because our focus of all our innovation and new products is in the 125cc plus segment, we are going much ahead of the industry in that segment, and hopefully even on an overall basis we will be outpacing, because we have been backing the segment which is at this point of time demonstrating growth in the industry.
Okay, all right, Mr. Sharma.
So yeah, from an annual point of view, there is nothing which is echoing back from the market, which is showing that, telling us that there will be a very strong end to the fiscal. In fact, I would watch November very, very closely, which is the aftermath of Diwali, to really understand that whether at a fundamental level,
yes,
consumers are coming back to the purchasing cycle.